15 in New York. We're going to be looking at what opportunities we have here going into our afternoon and then into the end of this week. We're looking at the dollar, and you're looking at this on the weekly chart, and this is zoomed out quite a bit. But what's important to note here is that this dollar strength trade is continuing inside of a series of extensions that we have from our previous Friday's highs to highs. And this dollar strength trade is very similar to the one that we had going into the summer and autumn of 2022. This was the last crypto winter, by the way. We're going into the end of the crypto winter this October. It is also a midterm election. As we're moving forward into the continuation of this trend, there's an intraday series that we've been inside of. There have been traditionals, and then those traditionals, they did go to and through profit targets, and they briefly defended extensions, but we ended up falling back into traditionals again. And then we've had these extensions already once to targets prior to this. And you can see here where the dollar and the euro's smaller intraday setups did break. Now, what this would suggest here from the perspective of the inverse correlations is that we have a potential for a little rally inside of those negative correlations. And here's what makes this also very interesting is that the S&P and the NASDAQ and the Dow and the Russell have diverged from one another. And there is a rotation going on out of the tech names, out of the Mag 7, out of the AI trade into what market participants perceive as being quality, and then the small caps, the Russell. And you can see that in the dollar correlations. You can see here S&P and NASDAQ, negative correlations, Dow and Russell, positive correlations. And so if the dollar pulls back into support, what do we have here for the S&P and the NASDAQ? Rallies. If the dollar is pulling back into its extension, what do we have for the Dow and the Russell? Weakness. They're positively correlated. So that's going to be interesting as we move forward here into the afternoon. Now, ultimately, is this still a dollar strength trade? Yes. Everything above the 100, 882 is a bullish above line in the sand. And we still have targets yet to hit on the euro. And of course, there's still room on the dollar to continue to rally. But there is a little tiny short-term pullback here that we could have as we go into our overnight time frame and then into our Friday morning. Ultimately, again, there is a dollar strength trade going on, and there's a bullish above line in the sand, the 100, 882. Let's move on here to Bank. Bank had been ripping here at the morning open, and the Russell and the YM ripped higher into profit targets. Now, since then, we have been pulling back into support again. And so have the YM and the Russell. They're pulling back into longs as we speak. The bullish above line in the sand is the 52.4621. That takes us to the VIX. And the VIX defended this morning its line in the sand of a long setup at the 1850. And what we were watching for as we were going into our morning was as long as that 1850 was holding, that the indices would have a potential, despite the negative correlations, would have a weakness event. We saw that weakness event on the ES and NQ. The ES sold off 100 points from its trading hours highs and then bounced. We had a 100 handle move, and that was our low. And as we go into our afternoon, and I think this is the case that the bearish case that you could make here for the indices, is that the VIX broke out of an opposing measured move short. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.